Welcome back, guys. My name's Austin. I'm recording another video here. This one's going to be focused on the best way to get in and out of trades in thinkorswim. There's a lot of rookie mistakes that people make here that do make quite a bit of a difference in terms of slippage and getting in and out of trades. And you want to be sure that you're doing everything you can to get the best entry price and the best exit price for every trade that you're executing, especially if you're just going for trades that may only be a few minutes long, and you really want to make sure that you're getting out, at the top of the green candle or at the bottom of the red candle if you're shorting, or you want to make sure that you're getting in and out at the best price. And so this video really has to do with thinkorswim as a platform itself because there are things that new traders may not know about the platform and how it works, and so that's kind of what I'm going to be showing you here. So this is going to be a really quick video, and I do want to point out too that the link to my Discord server is in the description. Several people have joined already and are asking questions, and I'm always there answering questions, and I'm happy to chat with you as well. And we can have a conversation about anything you like. But I'm recording these videos based off of what it seems to me people need the most help with. And this is actually a great topic. So in thinkorswim, the first thing to note here, I'm in the active trader window. This is how I have my chart set up. I have a separate video about how to set all of this up, but one of the aspects of how I have things set up here is this active trader ladder here. It's this little tab on the right that says active trader. And this is super, super important. This is what I use to not only look at as kind of a level two, um, but also I use it to get in and out of trades. For the most part, I use this to get in and out of trades. I do also use these buttons, but I mostly use these to get in and out of trades. Now, the most important thing is I'm going to say for my strategy, I pretty much only use limit orders to get in and out of trades. I would never use a market order to get in or out of a trade, and I'll tell you why. Especially early in the morning, these candles are moving all around. There's high volume. This particular stock may not be a great example, but if we move to, Neo, for example, this is maybe a better example, or you know, XPEV maybe 100 million shares of volume, right? These candles are moving around like crazy. They're fluctuating. They're going up and down. People are buying and selling like crazy. The stock is, tug of war, and you want to make sure that you're getting in and out at the best price. But the problem is that thinkorswim, even if you're on real time quotes, and you may want to make sure that you're on real time, you go to application settings, you go to system here, and you want to make sure you're on real time, no delay. That is so important. First thing, you need to have real time, no delay. And you need to make sure that in your active trader, if you are using active trader, you want the order submission rate to be 0. You want to set this at 0. And I have my price ladder to reset every 3 seconds. All that means is this moves around a lot. The ladder moves around a lot, and then it'll reset me on the center every 3 seconds. So I can scroll down and set a limit down here, but then it'll reset after 3 seconds and put me back where the market is. Anyway, that's a little bit besides the point. But again, I only set limit orders, no sell market, no buy market. I never use these buttons. I guess I just have them there. I don't really know why I have them there. I suppose they could be an emergency get out button, same as flatten. Flatten is also a market order. It depends if you're short or long. It'll just flatten your positioning, get you out. Whether you're short, whether you're long, it will just flatten your position to zero, to zero. And it will use market orders to make that happen. But again, you don't want to be using market orders, in my opinion, if you're day trading. And the reason is that you have these fluctuations in price, especially early in the morning. And thinkorswim, even if you're on real-time data, will not show you these fluctuations. It just does not update fast enough. If you're in a program like Lightspeed or something where it actually has real-time data, because again, thinkorswim says real-time data, but this is a zero commission platform. This is a free platform. This is not the best trading platform out there. It's sufficient for my strategy and what I need it for, but it's not. it's not actually real time, because if it were, you'd see these candles moving around a lot faster, and you'd see a lot more updating. You'd see the level 2 going crazy. Even if you think it's busy on real-time data, trust me, if you're on using a broker like Lightspeed, you'd notice that the numbers move around a whole lot quicker, and you get access to seeing even more intricate fluctuations in the price. And those are fluctuations in the price that are happening while you're watching it in thinkorswim. They're happening. You just can't see them in thinkorswim. It doesn't, just because you can't see it doesn't mean it's not there. And that's exactly what's happening. So then, okay, then what's the problem with using market orders? The problem with using market orders is if you market sell to take profit, let's say I enter long here and we're on this candle, right? And I hit sell when I see this candle get to the top here, I hit sell market. But the problem is in the time that I saw it, the candle up here, right? I saw the candle up here, so I think I'm getting out at the top of this candle, at the top of the range of this candle. I hit sell market, but the problem is there are fluctuations happening so quickly that I really don't know if we're at the top of this candle, and we may not be. We may be, but we may not be. Thinkorswim just won't show you that, and it actually may be true that when you hit sell market, it takes a full second for your order to go through, and a second is a lot of time. Boom, we push back down to the bottom of this range. All of a sudden we're down here, and my market order fills me down at 37.60 instead of 38.30. And you know what I mean? And there's just nothing you can do to control that because thinkorswim won't show you where the actual price is. It updates as often as it updates, but it will not update real time because the price is moving a lot faster, especially in these first 30 minutes than you think. So when you think you're getting out, where you think you're getting out, you may be getting out at a worse price. I suppose it's also true. You may get out as a better price. Maybe it pushes up in that second. You hit sell here, but then you got a better price because it squeezed up a little higher. It goes both ways, but you definitely want to err on the side of caution. And when it comes to taking profit, you want to make sure that you're getting out at the best price. So what do? I hit join the ask. And again, the fluctuations, I keep saying this word, the fluctuations are happening whether you like it or not. Join the ask just ensures that I am saying I want buyers to come to me. I want to the uh, join the lowest ask price for the stock right now. And you know that if you're selling on the ask, then that means buyers are willing to pay uh, at the ask price to get into the stock. And typically, when a stock is going up, and you're in a position to be taking profit, you know that if the stock's going up, that means buyers are coming up. Their buyers are moving up in their price to meet sellers, and you can hit join the ask and feel, relatively safe if a stock is squeezing up like this. You can feel safe hitting join the ask and knowing that buyers are going to come to you. Now, that doesn't mean you're going to get filled, but it's a trade-off. You're hitting join the ask and you're saying, I want a slightly better price. If you think about, take your left hand and put it to the left and say this is the bid price, and then you take your right hand, you put it over to the right, and you say that this is the ask price, and then in the middle is the market price, and it's all about buyers meeting the sellers. And so when you put your order on the ask, you are putting your order on your right hand. Your right hand, you're at the ask price, and you want the buyers to come all the way to you to get to fill your order at your desired price. So you're really in control. But the trade-off is they might not come up to that price, and they might only come however far that they're willing to go. And then all of a sudden, the buyers stop accumulating like they were before, and the buyers start lowering their price because they're no longer willing to pay the high price that the ask is asking. So then they start moving down, and then the stock starts moving lower because the sellers move down in their price because the buyers are no longer willing to move up in their price. I don't know if this is all making sense, but it really is just supply and demand, and buyers and sellers meeting each other in the middle, and you have to weigh out the benefits. But for the most part, when I'm taking profit, I would do it. I would hit join the ask, and that's how I would be taking profit. And on the reverse side of things, if I'm short, then I would hit join the bid and try to get out at the bottom. Even if, let's say I hit join the ask and I'm not getting filled, and here's this candle starting to form. Now we're starting to pull back a little bit. So what would I do? I go back and forth. I would hit cancel if I don't like where my order is set. And I would hit join the ask again, in which case the ask might be slightly lower because we're starting to pull back. And then in that case, I would just wait for one of those fluctuations. I would just wait for one of those fluctuations in price to push up a little bit and then fill me at the ask price, and then we could start moving lower again. I don't know if that makes sense, but you just want to take advantage of those fluctuations that you know is happening, and you can see it here. Thinkorswim will show you the high and low of the candle, but just it's just that while the candle's forming, you can see it move around, but you can't see it move around as much as it actually is moving around, if that makes sense. It's moving around a lot faster than it'll show you, but it does give you the true range. So um, it shows you some, just not all of the real time action and activity that's going on. Um, what else was I gonna say? Join the ask. So join the ask how I take profit on a long, join the bid is how I take profit on a short. Now, I do use this ladder quite a bit too. You can see in the level two where the buyers and sellers are stacked up, and you can see that, once, buyers break through and fulfill, this order for, 1,600 shares or um, what have you, then you can see where the other sellers are. The market's closed right now, so this is not going to make sense, but you'll be able to see the market depth just like the level two and where all the orders are stacked up. And so that might give you a clue as to where you might want to set your sell order. If you see that there are a bunch of sellers here and you see the number starting to go down, again, Thinkorswim only updates so quickly, so sometimes it's hard. But you can see that, okay, there's a bunch of sellers here. Even if I don't see the number coming down, the stock's moving up. I feel like maybe we can crack through that price. And if we do crack that price, I'm going to set my sell order 20 cents above that price, because I know that once we break that level, boom, we're going to get a rip and buyers are going to flood through, and I'm going to set my sell order here, and I feel confident that I'm going to get filled at that price. Or you might see a technical level here. Okay, here's a price 38.80, 38.90. I feel good about that technical resistance. That might be a good spot to take profit. We can see how it played out. It ripped through that, but maybe let's pretend you didn't know that. So here's where you might set your sell order 38.80, and you can scroll up. This is kind of far away, but you would be able to scroll up all the way to that price and set your sell order there, and you'd set your limit order just by clicking, and then you're able to then that order is live, and once it rips up, you'll get filled. And so that's kind of how I use this ladder to get out of a trade. And likewise, if I'm trying to get in a trade, I can do the same thing and scroll down and look at lower prices, and I can hit buy and set my stop limit buy order wherever I want. And if it dips down to that price, then I'll get filled. And it's all about reading, looking at the essentially level two and understanding where the sell orders are, where the buy orders are, and where do I think I can get filled if the trend continues, or whatever. But again, I would never use these buy sell market, because you really just never know where where you're gonna end up getting filled. Okay, one of the last things I'm going to say is when you join the ask and join the bid, if you're trading a stock and you're like, okay, I want to take profit, the last thing to note is when you hit join the ask, you're joining the ask at whatever the current lowest ask price is, and you may not know what that price is. All you know is that's the current. I'm always going to be happy hitting this button taking profit, because I know that that's what sellers are asking. And so you don't actually it doesn't really matter to know what that price is, because if you're taking profit, you know that you're getting you're getting a good price because buyers are coming up to meet your price. And if buyers are coming up to meet your price, then that may be an indication that the stock's going to continue higher, and maybe, it might be the case that you ended up leaving some on the table. But hey, better to get out on the ask than hit sell market and all of a sudden you get a terrible fill because you put a market order in, and a fluctuation in the price within 1 second caused you to get a bad fill. And selling the market, even if you don't have a fluctuation that works against you, it's just going to sell your order. It's not going to put you at the ask. It's going to put you somewhere in the middle of the spread. And actually, you're lucky if you get out in the middle of the spread between the bid and the ask. You're lucky because if you hit this button, it has every right to just sell on the bid. And if you're selling on the bid, then you know that you're going down to the buyers and saying to the buyers that you're willing to meet at their price. And if you're taking profit, that's not what you really want to be doing. There are times when you would want to sell on the bid and you would want to buy the ask. If a lot of breakout traders that trade breakouts, if you're breaking out of a certain technical level or you're predicting a rip through VBOP or whatever, that would be a place where you would want to buy on the ask. Maybe. It depends. In thinkorswim, I would never trade that way. I would not trade breakouts in thinkorswim because if you're using thinkorswim, because again, it's just not current enough. You don't if you see the rip happening in the candle, if you see this rip happening, you're already too late. You're already too late and you're going to hit buy the ask and then you're going to get filled at the worst price because you're buying at the ask price and you're buying high and then all of a sudden you come back down and not only are you long the stock but you're long at the price at the literal highest price because you thought that this was a breakout and you're moving higher, and that's a mistake that a lot of traders make too, is they buy at the ask price, they buy market, and it you know even if you hit buy market, the worst case scenario, you buy at the ask price or higher, and you're just getting a terrible fill. Sell market if you're trying to take profit. Worst case scenario, you're selling at the bid price or lower, and you're getting a terrible fill. So I just avoid these buttons because you never know what price you're going to get. And if you're day trading, you have to be very precise. If you're trading these candles that offer, uh, you know, 30, 80 cent, whatever. These candles that are very important. Every cent matters when you're trading this strategy, my strategy at least. I want to be very careful about where I'm getting in and out. All right, so that was a lot of information. I hope that this video was helpful. This was a long video, longer than I was expecting. Again, the Discord link is in the description. But I hope some people found this helpful because I really think this is a very important topic when it comes to trading and when it comes to trading on thinkorswim, especially because I'm going to say it again. There are small fluctuations in price that happen under your nose that you don't get to see in this program. And by hitting buy the market and sell the market, you are at the mercy of those fluctuations. Whereas if you put limit orders out there, whether to buy or sell, you're in control of exactly what price you're getting. And you may or may not get filled, but that's something that you have to work on, and that's something that you have to learn how to, look at price levels and look at the active trader window to make sure that you're gonna get filled, or if you're not gonna get filled, what you're gonna do, and what your backup plan is. All right, so that's it. Hope you guys learned something, and I'll see you guys in the next video. Have a good rest of your day.